Good evening and a very happy Diwali to all our viewers and to your families. Here's wishing all of you health, wealth and most importantly a lot of happiness. Anuj, happy Diwali to you.
Happy Diwali Sonia, and happy Diwali to all our viewers and everyone, of course. In general, it's been a great Samvat for stock pickers. You have to be a really unfortunate stock picker to lose money this year. Otherwise, you would have made a lot of money. And we can hope that may Goddess Lakshmi continue to shine on all our viewers all through this Samvat as well. And
it's a very special Diwali for you, Anuj. You have a new entrant in your family, so you couldn't have asked for anything more.
Oh, clearly, Sonia. I mean, I'm the happiest that I've been at any Diwali now. Of course, as you said, 2 daughters. So, yes, I'm very happy.
But you know what? For most people, it's all about making money, right? If you look at the headline index, you may feel that not a lot of money has been made. The headline index is up just 10%. But if you look at individual stocks, you could have made pots of money this year.
Yeah, and you know what? If headline index is up 10%, that's great. You know, headline index could be down 5% and that would be the real test of a good portfolio picker. But if headline index is up 10%, then as I said, you have to be either a really bad stock picker or an unfortunate stock picker to lose money. You know, Sonia, index is up 10%, but I was just looking at Nifty stocks. 30 Nifty stocks give double-digit returns, and you know, some of them 80%, like Hindalco and Tata Steel, or Eicher Motors 55%. And if you're really lucky and you picked out a stock like Manappuram or Precall, you would have made a lot of money. So the sense you got is that our market has been a stock pickers market, a bottom-up stock pickers market. The index has not moved. The index has frustrated now for last many years now, including the last 4 or 5 months. But if you got your stock right, you made a lot of money, and that's what we are here to do. We'll try to tell our viewers a lot of individual stock ideas and broader sectoral calls to make a lot of money in Samvat 2073.
Oh yes, and it's a very auspicious day. So what, in half an hour from now, we're going to have the Lakshmi Pujan time, and we're going to have trading as well for 1 hour. So we have a lot of guests joining us. Also, you know, if you compare our markets to other markets globally as well, we've done a much better job. So while we may think that India is up only 10%, look at some of the other markets. The US is up not even 4% this year. The Chinese market is down 15%. Hong Kong has done nothing much. So in that context, it's not too bad. It is the cleanest shirt in an otherwise dirty laundry basket.
Oh yes, you know, the only thing is that, you know, the start of the Samvat was bad. Towards the end of last year, of course, we saw a big decline. Then, of course, we had a huge rally from February onwards. That continued till July. From July, we have been flat. But all in all, I think, you know, you would have to say that it's been a good Samvat.
Okay, so since it is a good Samvat, joining in now are 2 of our all-time favorite guests. We have Ramesh Somani and Atul Suri, market veterans and gentlemen who've been with us through thick and thin in this market. We'll also be joined by a whole host of other guests in the next 1 hour. We have Samir Arora, Ramdev Agarwal, and our very own Udayan Mukherjee, who will also be with us. So it's a packed house that we have in the next 1 hour. So lots happening on the show. But first up, we have a guest with us here in the studio. Atul, happy Diwali to you, and to your family.
Same to both of you and all the viewers.
How has the year been for you?
It's been a good year. I think, as you rightly put it, that on the index, it's not been spectacular. It's 10%. 10% is not bad, but with inflation being what it was, it's nothing big. But what happens is that you see a lot of stocks outperforming. The mid-cap index is up 25%. So it's nice when your benchmark per se is not doing too well, but the stocks are doing relatively better. And I think that goes for most of the funds, most of the portfolio managers, you know, that stocks have done much better than what the index is showing. And it's been a good year. Middling year, kind of.
Okay. Yeah. Atul, happy Diwali. I'll come to you in a bit. Ramesh Dimani is also with us, so let me wish him also happy Diwali. Ramesh, happy Diwali, and thanks for being with us on Mahurat Day, as is the tradition. What's your sense of how Samvat 2072 has been, and what do you think lies in store for Samvat 2073?
Thank you, guys. Very, very happy Samvat to you and your viewers. It's become a tradition and always a pleasure to come on your show and discuss, you know, the year ahead. And I think the past tells us what the future is going to be. The past perhaps is prologue. I think the Indian economy that bottomed out 3 years ago, you know, continues to chug along. I think now we are seeing some signs of recovery in consumption, recovery in a lot of other sectors. So I am very hopeful for the new Samvat. As you know, I don't necessarily look at the indexes as an aggregate, but individual stocks. And as both of you have been saying, it has been a stock picker's paradise. I think it's the place you want to be. And anyone who's picked stock carefully, respected their capital, I think has a lot of smiles this Samvat.
Oh yes, we are all smiling here in the studio as well because we've seen the kind of returns that individual stocks have given. Ramesh, happy Diwali to you and thank you for being with us on the channel through thick and thin. What's the advice to retail investors? Because, you know, someone I was speaking to the other day said, Sonia, if I had invested in gold at the start of the year, I would have doubled my money because gold is up almost 20% while the Nifty is up only 10%. What do you think will happen to asset classes from this Samvat to next?
You know, I think one popular pastime in Diwali, if you go to various houses, people play cards and they tend to play the gin and rummy type where, you know, you have a bad hand, you pack and go away. I don't think markets work quite that way, Sonia. I think you want to buy great businesses and you want to hold them through periods of time. As you know, even the Sensex has compounded at 13-14% over long periods of times without dividends. Individual stocks have just done much better than that. And it's always very risky to try and time the market. As we've often said on your program, the more important thing is time in the market. So to my advice to retail investor is that the bull market that began 3 years ago in the depths of a meltdown in August 2013 when the rupee was 70 and there's a lot of lack of confidence in corporate India is now 3 years, but it's still got a long ways to go. I think this is as good a time as any to invest. I would not be afraid to tell retail investors that if you have some savings, put it in the market, put it into great businesses. I think the index is headed substantially higher, not just for the next year, 2 years, but perhaps for a period even longer than that. I think there are no signs we can spot right now that the bull market is ending. So as long as you don't spot the signs, we request you to remain invested.
Okay, time in the market more important than timing the market. Atul, you know, so what do you do this year? In terms of leadership, we have banks and consumption which have done well. Autos, for example, sure. There's a secular bull market there. Do you stay invested there, or do you look at maybe IT, which has underperformed and has actually destroyed a bit of wealth this year? How do you approach these big pockets in the market now?
Essentially, Anuj, I'm a believer in following the trend. So I really, feel that yes, you can do a contra trade. For example, if you look at the best performer of the last year was the metal index. But if you go back to Diwali 2015, I don't think anyone would have called the metal index. And even if you had called for it, you would be in grief for the next 4 to 5 months. Yes. So the whole performance is back-ended. So it's very difficult to talk about 1 year because, a year is made up of many quarters and many months. So things are changing and dynamic. So I think that the best way is to sort of, follow the trend. I feel that this whole consumption theme that we are sort of talking about will continue. Those stocks may not do these pretty things, may not double or triple, but the power of consistent compounding is where investors have been rewarded in the long term. And I really believe that that's the key, the fundamental, the crux of making money in these markets is to compound consistently. And I feel that this whole consumption thing will propel the markets higher. I still think that, we may not be again, looking ahead, when I look at the charts of the markets for the next 1 year, I feel that we will go on and make lifetime highs. But we really are not going to have a runaway bull market. Even in spite of getting into lifetime highs, we will get into a moderate index kind of performance. And in that, it's going to be stocks that are going to really sort of, outperform and help you. So it's going to be more of what we've seen last year. As I said, last year we had a share of surprises, like the worst performers of the years prior to that were the best performers. Metals did well, real estate did well, and I think the darling for the last 4 to 5 years, which was pharma, is absolutely flat. IT was negative. So I really think that the consumption theme will play out. It's rewarded for many years, will do so going ahead. And more importantly is the importance of compounding and staying in it. And if you're a good stock picker, whether you use fundamentals or technicals, you stay with the trend. I feel that's the best way to go. I mean, there's no need to be really smart and pick, the best stock or the best sector. I mean, if you're lucky, you get it. More often than not, it doesn't happen to me at least.
Okay. Well, Diwali is all about giving gifts, right? And our viewers can't see it, but your son is here. Yeah, so I'm going to, in a bit, ask you what is that one stock that you would gift your son today, which will help him sort of 18 years, 20 years later. But I'll give you some time to think about that. Before that, since we're speaking to a lot of market veterans, how can we forget about Udyan Mukherjee? He joins in as well. Udyan, happy Diwali to you. Thank you for taking the time out and speaking to us. The weather has improved here in Mumbai. I'm sure it's exceptionally good up in the hills. But how has the year been for you?
Couldn't have asked for better, Sonia. Happy Diwali to you and all our viewers. It's very nice to be talking to you on Diwali evening from the Himalayas. It's fantastic weather out here, sunny and cold, and it's been a nice year. The stock market might have been better unless you were in the right kind of stocks. I was hearing some recounting of sectors which have done well, but if you were in, say, commodities or NBFCs, it would have been a very special year. But I think otherwise it's been an average year for equities, and it's not been a stocks kind of year. You know, I think this year, the last 12 months, it's really belonged to commodities, and that's the star of the last 12 months. Either it's commodities or commodity stocks or commodity emerging markets like Brazil and Russia. I think just they've taken it away over the last 12 months. So I think if there was one game in town, last Diwali to this Diwali, it has to be commodities, it's not stocks.
Well then, hi, happy Diwali. Of course, you know, hindsight is 2020, so now we can look at all these stocks and say that, you know, you would have made a lot of money if you were in these stocks. What's your sixth sense telling you? What's going to be the big sector to watch out for in this Samvat?
Happy Diwali, Anuj. It's difficult to say, you know, but as you said correctly, you know, if you sit at the end of the year and you pick out 100 stocks and say, you know, these have been the stars and they've gone up 80% and 100%, it's hindsight. So it's not been a bad year. You know, at the end of the day, you will have to say that the mid-cap index was up some 23-24%. But I think those are two clusters actually dominated very, very heavily. So it was commodities of any kind, metal, cement, sugar, that basket, and the NBFC basket. If you take out these two baskets, I think the mid-cap index or the small-cap index would have probably returned 11-12%, which is not bad, but which is not spectacular. You know, so, you know, I was talking to Rakesh just a few days back, and something that he said actually stuck with me because he said, Udayan, I've underperformed this year. And, you know, it was strange to hear Rakesh say that, because you know that he's so successful as an investor and his portfolio is almost completely mid-cap. And then a man as savvy as him was putting his hand up and said, I actually underperformed. So when we sit at the end of the year and say, you know, these mid-cap jewels went up 100%, and Rakesh tells you that, you know, actually he underperformed during the year, it just underscores the point of how difficult it is to actually pick those mid-caps which we tabulate at the end of the year and say they were spectacular performers. So it is very, very possible that a mid-cap investor last year or over the last 12 months was actually not in commodity stocks or in NBFCs, and then his returns were not very spectacular. So this thing looks much better in hindsight than it is actually to do in real life. And that, I think, is a point which is important to mention. And therefore, we should mention what the Sensex and Nifty have done over the last 12 months. And that is go up just about 8 or 9%. And in doing that, I think, aside of all the noise that you and I keep talking about, because, you know, your job is to talk about the stock market every day. And therefore, it seems like so much happened in the last 12 months. That crash in February, the subsequent rally. You know, before that people were talking about bear market, and now we are talking about a roaring bull market. Actually, what has happened is the market has just tracked earnings. I think last Diwali to this Diwali, earnings would have gone up 8-9%, and the Sensex has gone up 8-9%. So barring all the noise which has happened in between, basically the message was there was no re-rating of the market. The market just turned in what earnings did over the last 4 quarters, and that is the sum and substance of it.
Okay, just about 30 seconds left for pre-open. Of course, it's going to be an interesting Samvat. Ramesh, same question to you. You know, in hindsight, we can look at Manappuram and say that it was up 200%. We can look at a pre-call and say it was 275%. Or we can look at commodity stocks, sugar, that they were up 100-200%. But where are you placing your bets for this year in terms of the mid-cap broader market? Which are the themes that you're backing?
Sure, that's a great question. Always, I think Samvat in New Year's, you spend a lot of time trying to think that through. And I read a quote which will kind of explain to you where my money or where my mouth is heading. I read a report recently by someone in the CIA who said that there are only 2 kinds of companies in this world. companies that have been hacked and companies that will be hacked, and they're all going to converge into companies that have been hacked and re-hacked. So obviously I'm putting my money where cybersecurity is. I think that's a very looming threat. I think it's just playing out as we speak, almost real time. I think a lot of the banks, stock exchanges, regulatory authorities are getting hugely concerned about that. A lot of money will flow into it. For example, the Bank of America chairman was recently asked what his budget was for cybersecurity, and he said unlimited. So I think this is an area that's going to be tremendously focused in terms of a new theme. So I think one would look at that sector as playing out. Now this plays partly into tech, partly into hardware, but that seems like a promising theme for the new year.
Okay, well, we'll come back to discussing about the themes from this Samvat to next. For now, we have some pre-opening rates that are ticking in, and you know what? Well, it's an auspicious day, so the Nifty is up almost about 0.7%. Looks like there's a lot of buying in the big winners of this year. Remember, Tata Steel and Hindalco are the biggest winners this year from the Nifty, both up about 80 to 85%. And today we are seeing Tata Steel up about 1 to 2%. A couple of other metal stocks doing well. Eicher Motors is up almost about 2-3%. Autos have had a good run as well. Tata Motors, Hero MotoCorp, all up about 20 to 30% this year between last Samvat and now, that is. And those stocks continue to move up higher. Not too many losers except IT, of course. It's had a very disappointing run this year. And TCS is just about flat to negative. But for now, looks like it's going to be auspicious tidings today.
Oh yes, and I think Vakrangi Software is up about 11%. I don't know if it ties in with what Ramesh was just telling us, but I think a lot of people are listening and they are of course trying to find out which are the stocks. Of course, this is no recommendation. This is not to say that Ramesh referred to Vakrangi. Absolutely not. I'm just trying to say that that's a stock which has done well. Just keep in mind the SGX Nifty was down quite a bit because of what happened with Hillary Clinton and Donald Trump, the gap being narrowing, and so. Of course, we talk about more as auspicious occasion. The start is always good, but let's see how the rest of the day actually pans out.
Okay, we still have a couple of minutes, right? I mean, about 10 minutes more before the opening rates kick in. So coming back to the question I was asking you before the break, your handsome son is sitting next to you. So if you had to give him one Diwali gift as one stock as a Diwali gift, or maybe two for the next 5 to 10 years, what would it be?
So what I have done is essentially built a basket of consumption theme. There are some of these stocks, I cannot but over the years understand the importance of compounding. And I've made a small basket which are really consumption-led stocks, very popular, high PE, very expensive, so to say. But when you look at 8, 10, 12 years down the line, you want a certain predictability and certain consistency. So, whether you have your 5 or 7 stocks, whether it's a Britannia, Marico, Dabur, and ITC. So it's very difficult to, bet on one, and you don't know what the terminal value is going to be 10, 12 years down the line. But I think a little bit of a basket in that space.
So you could hedge your bets, so to speak.
Yeah, you can hedge you don't know which of these horses is going to do well. One hopes that most of them are going to get there. But the importance is of reaching there. You may try to be smart and cute and try to pick up some multi-bagger, multi-winner, but it's difficult to do that every year. As I said, it's more important that you have something that, sort of takes you through the journey. And the moment in this market, I've also seen that if you go through the journey, if you last the race, you do emerge as a winner. The risk is that you run too fast, and you just think it's a 100-meter sprint and go for it, and that's when you get injured or you get tired. So I really think that when you're talking about such a long term, it's the ability to be there, last out, and consistently be there and compound at that pace is what's important. So I would really go into a basket like these.
Okay, a basket of stocks. Ramesh, before we let you go, you have seen many market cycles. The one space which has destroyed a bit of wealth this year has been IT. As we speak, Infosys is at 52-week low. The large cap IT I'm referring to. A lot of people are calling that, the IT story for India is over. Would you be in that camp, or would you actually look at these as great bargains?
That's pretty silly in my view to say that the IT story is over, given that the fact that the market is moving to more and more software in so many industries. The old model may be broken and probably needs to be fixed. The idea that you ship heads to the West, earning dollars, services-oriented model perhaps needs to be tweaked. But you're finding, if you look beyond the top level for IT companies, a number of companies doing very innovative work in, Aadhaar, in, cyber security, in so many other areas. So, while it is a bit rusty, I would certainly say that what Mark Twain said, rumors of his death are premature.
Okay, on that very intellectual note, Ramesh Samani, thank you, and you have a great year. We'll of course be speaking to you several times through the year, but thank you for being with us. We'll take a quick break, but keep watching CNBC TV 18, because when we come back, we will be just in time for the opening rates.
I'd like to wish all the CNBC TV 18 viewers a very happy Diwali, a very prosperous New Year, and all the best in your investments in the coming year.